Good day, everyone. I am Danilo Daroy Jr. and actually, we are three reporters for this particular topic. So I'm going um, to report the first part. So basically, we're going to talk about the gross income or the taxable income and the sources of income. So from the previous reports, we know that they discussed about the taxing authority and who are taxable. So for our report, I believe that it will answer the question, what to tax to a particular taxable person? So that's why I'm going to talk about to you right now the about gross income and some of the sources of income. So it's important that we know them so that if you're going to be given a set of problem or we're given sets of facts, we would be able to identify what are uh, what are taxable income and from like what source or yeah. So first is the gross income. So Section 32 of the NIRC of the 1997 defines gross income as income from whatever source except otherwise provided. So the word there, income from whatever source, and I underlined it for emphasis. It includes income not expressly excluded or exempted from the class of taxable income, and irrespective of the voluntary or involuntary action of the taxpayer in producing the income. And this was mentioned in the case of Gutierrez versus CIR. So, therefore, the source is immaterial, whether derived from illegal, legal, or immoral sources, it is taxable. As such, income includes the following: treasure fund, punitive damages representing profit loss, amount received by mistake, cancellation or condemnation in the taxpayer's indebtedness, receipt of usurious interest, illegal gains, taxes paid and claimed as deduction, subsequently refunded, and bad debt recovery. So those are just an example of how this particular phrase, income from whatever source, is explained or defined. And so um, sources, income from whatever source except otherwise provided. And these include, but not limited to, the following items. So first is compensation for services in whatever form, paid, including but not limited to fees, salaries, wages, commissions, and similar items. Number two, gross income derived from conduct of trade or business or the exercise of a profession. Number three, gains derived from dealings in property. Number four, interest, rents, royalties, dividends, annuities, prizes and winnings, pensions, and partners' distributed share from the net income of the general professional partnership. So here, I'm going to distinguish now gross income, net income, and or taxable income. So here, gross income, from the definition I mentioned a while ago, it includes all income derived from every source. While the net income or taxable income, this refers to the pertinent items of gross income specified in the law or in the NIRC, uh, less the deductions and or personal and additional exemptions, if any, authorized for such types of income by the NIRC or other special laws. And then net income taxation is a system of taxation where the income subject to tax may be reduced by allowable deductions. So in gross income, it grants no exemptions, while in net income or a taxable income, it grants exemptions. In gross income, it allows no deductions, while in net income or taxable income, it allows deductions. The tax base for gross income taxation is gross income, while in net income or taxable income, the tax base is income tax. So the disadvantages and advantages for the gross income and or in the net income or taxable taxation is that first, in gross income, it simplifies the income taxation, while in the net income or taxable income taxation, it is confusing and complex process of filing income tax return. Um, the former is there is substantial reduction in corruption and tax evasion since the exercise of discretion to allow or disallow deductions is dispensed with. While in the latter, it is vulnerable to corruption on account of margin of discretion in the grant of deductions. In the former, more it is administratively feasible, while the latter, it provides equitable reliefs in the form of deductions, exemptions, and tax credit. In the former, it does away with wastage of manpower and supplies, and in the latter, it tax audit minimizes fraud. I believe the Philippines follows the net income or taxable income um, taxation. So now I'm going to talk to you about the sources of income subject to tax. And I'm going I'm just going to discuss, I believe, compensation income, fringe benefits, professional income, and income from business. So first is the compensation income. So the term compensation means all remunerations paid for services performed by an employee for his or her employer, whether in cash or in kind, unless specifically excluded under sections 32B and 78A of the 1997 International Revenue Code. So every form of compensation, it is every form of compensation for personal services, and it is subject to income tax and consequently to withholding tax. So compensation income is considered as having been earned in the place where the service was rendered and not considered as sourced from the place of origin of the money. So here, um, it is when a taxable person renders or performs service and that he gets paid by his or her employer. So I believe because this is very usual and it is common, and I think it is also common knowledge what is compensation income. And since yeah, so next, fringe benefits. So what is fringe benefits? It is any good, service, or other benefit furnished or granted by an employer in cash or in kind, in addition to basic salaries to an individual employee, except a rank and file employee. So what are the examples of the fringe benefit, of a fringe benefit or fringe benefits? So it is housing, expense account, vehicle of any kind, household personnel such as maid, driver, and others, interest and loans at less than market rate to the extent of the difference between the market rate and actual rate granted, membership fees, dues, and other expenses, athletic clubs or other similar organization, expenses for foreign travel, holiday, and vacation expenses. Look on my notes. So the fringe benefits are imposed to the managerial or supervisory employee. It is a final income tax which is imposed on the managerial or supervisory employee, and it is withheld with the employer who files the return and remits the tax within 25 days from close of each calendar quarter. So what are but it is also important to remember that there are fringe benefits that are not subject to tax or income tax. So it is also important, I believe, to memorize what are those or what are these. So what are these? So it fringe benefits not taxable are fringe benefits that are authorized and exempted from tax under special laws. Those that are contributions of the employer for the benefit of the employee to retirement, insurance, and hospitalization benefit plans. Benefits given to the rank and file employees, whether granted under a collective bargaining agreement or not. So, as by definition a while ago, rank and file employees are exempt from the fringe benefits tax or FBT. Um, and also the de minimis benefits, which are defined in the rules and regulations that is promulgated by the Secretary of Finance upon recommendation of the Commissioner. Benefits granted to employees as required by the nature of or necessary to trade, business, or profession of the employer. And benefits granted for the convenience of the employer. So, what are the examples of um, what are the examples of de minimis benefits? So it is also important to memorize what are um, those de minimis benefits. So RR 8-2000 provided for the list of de minimis benefits. So it is defined as facilities and privileges of relatively small value furnished or offered by an employer to his employees. These are not considered compensation subject to income tax and consequently withholding tax if these are offered or furnished by the employer as means of promoting health, goodwill, contentment, or efficiency of the employees. So is love a de minimis benefit? It doesn't matter because love can be quantified in pesos, unlike you're a gold digger. So the following are considered de minimis benefits of all types of employees. These are exempt from tax. Number one, monetized unused vacation leave credits of private employees not exceeding 10 days per year. Monetize value of vacation and sick leave credits paid to government officials and employees. Medical cash allowance to dependents of employees not exceeding 1,600 per employee per SEM or 250 pesos per month. Rice subsidy of worth 2,000 pesos or one sack of 50 kilogram rice per month, amounting to not more than 2,000. So uniforms and clothing allowance not exceeding 6,000 pesos per month, actual yearly medical benefits not exceeding 10,000 per month, laundry allowance not exceeding 300 pesos per month, employee achievement awards for length of service or safety achievement in the form of tangible property other than cash or gift certificate which value not exceeding 10,000, gifts given during Christmas and major anniversaries not exceeding 5,000 per year, daily meal allowance for overtime work not exceeding 25% of the basic minimum wage, benefits received by the employee by virtue of a collective bargaining agreement and productivity incentive schemes provided the total annual monetary value from both CBA and productivity schemes combined do not exceed 10,000 pesos. All other benefits given by employees which are not included in the enumeration shall not be considered de minimis benefits and hence shall be subject to income tax and withholding tax on compensation income. So the list is exclusive and But the excess of the de minimis benefits over their respective ceilings shall be considered part of other benefits, and the employee receiving it will be subject to tax only on the excess over the 82,000 pesos ceiling as per RR 10-2008. And I believe it's changed by RA 10653. So in other words, when a benefit is de minimis with a ceiling, the benefit is exempt from FBP up to the ceiling. Any excess over the ceiling shall be part of the other benefits exempt up to 82,000. Anything in excess of 82,000 will be taxable. So any amount given by the employer as benefits, whether de minimis or others, shall be deductible as business expense. So to recap, fringe benefit are given to rank and file employee is not subject to fringe benefit tax. Fringe benefit given to a supervisory or managerial employee is subject to fringe benefit tax, and de minimis benefit, whether given to rank and file employee or to supervisor or managerial employee, is not subject to fringe benefit tax. And then it is also important to remember uh, this fringe benefit that's not taxable. Um, the benefits granted to employees as required by the nature of or necessary to the trade, business, or profession of the employer. So we must remember the keywords by the nature of or necessary to the trade, business, or profession of the employer. And the last one is benefits granted for the convenience of the employer. And it is also in in the book of English, um, the example of this granted for convenience of the employee. Let me just here. Oh wait, here. So the example of this fringe benefit that's not taxable. The examples are housing privilege of military officers inside or near the military camps, a housing unit situated inside or at most 50 meters from the perimeter of the business premises, temporary housing of an employee for 3 months or less, and then expenses of the employee which are reimbursed by the employer, which are receipted under the name of the employer, not personal expenses of the employee. And then business expenses which are paid by the employer for foreign travel of his employees in connection with the business meetings or conventions. So let's move on. So as I've said a while ago, fringe benefit tax is a final income tax imposed on managerial or supervisory employee. It is withheld by the employer, and it is also an expense deductible from the employer's gross income. So how do you compute fringe benefit tax? It is grossed up monetary value times 32%. And to come up with grossed up monetary value, it is actual monetary value over 65%. Before it was, I believe, 63% or 62%. So next, I'm going to talk about the professional income. So professional income refers to the fees received by a professional from the practice of his profession, provided that there is no employer to employee relationship between him and his clients. Otherwise, it is a compensation income if there is an employer-employee relationship. And the existence or non-existence of employer-employee relationship is material to determine whether the income is a compensation income or professional income. And if the employer-employee relationship is present, that is considered compensation income. Otherwise, it is a professional income. For purposes of taxation, there is no deduction allowed against compensation income, whereas allowable deductions may be made from professional income. And by RR number 2-98, professional income shall be subject to creditable withholding rate tax rates prescribed. Next is the business income. So um, the business income is the gross income derived from the conduct of trade or business or the exercise of profession. Uh, it may refer to income derived from merchandising, mining, manufacturing, and farming operations. And the term gross income derived from businesses shall be equivalent to gross sales less sales returns, discounts, and allowances, and cost of goods sold. And the gross income means gross receipts less sales returns, allowances, and discounts. And this is as per the section 27 of the NIRC. So cost of goods sold, it includes all business expenses directly incurred to produce the merchandise to bring them to their present location and use such as invoice costs, goods sold for a trading concern, or cost of production for a manufacturing concern. So cost of services are all direct costs and expenses necessarily incurred to provide the service required by the customers and clients, including salaries and employee benefits of personnel, consultants, specialists directly rendering the service, and cost of facilities directly utilized in providing the service. So here I have in the PowerPoint, I have a simple um, formula on how to come up with the gross income from derived from business income. So it's total sales less cost of goods sold, and also in the book of English it says he um, he included um, adding the all income from incidental and outside sources. So I guess that's all for my report. And the next reporter will discuss to you more on the sources of income. So thank you and have a good day.